Hey folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Tuesday, June 27th, 2017. Markets are seeing some heavy selling. This is the chart of the SPY, the S&P 500, as we see it collapsing down. We just came off the lows of the day. It's actually a little bit of a technical double bottom there. But I will say this, the market's going to go lower. And one of the keys is you're at a very pivotal level here. Now, if it holds today, it gives it a slight chance that it could survive, but honestly, I don't think it will. But the reason why I say there's a major level here, because if you zoom out on the chart, you can see pivot low, pivot low, pivot low. That is the bottom area of a bullish consolidation pattern. So the pattern itself, if we hold this level, technically is still in play. I think we've hit it too many times. I think the market wants to go down and fill this gap right here and maybe even go a little bit lower, and that would essentially, to me, negate the bullish pattern here and create a little sell-side signal on the S&P 500. Bottom line is S&P is down about 0.6% today. The real blood is in the technology sector, folks. I mean, you're seeing stocks like Amazon, Facebook, and Apple and other players just absolutely get crushed. Take a look at Amazon today. AMZN down $14 on the day. And I'm telling you right now, Amazon's going much, much lower here. I think as early as tomorrow, you could see it fill the gap at 963 and change. Now, the reason why that's such an important gap is that was where they announced the buyout of Whole Foods. Now, remember, the crazy thing about it is usually when a company buys another company and they're paying such a hefty premium like Amazon did for Whole Foods, the stock of Amazon would drop. But because of the hysteria, because of the kind of the greed out there and the hype, you saw Amazon actually shooting higher. That was not the proper normal reaction. So the obvious signal was to short it on that pop up, and that's exactly what we did in the research center. So in fact, we're short Amazon. We're actually in the money pretty nicely here, and we're looking for a move to the downside, minimally to this 963 area gap fill. I even think it'll go a little bit lower, but in the very least, you should see the 963 target. And again, just think about it. A company is paying whatever they paid. What do they pay? A 30% premium on Whole Foods? Well, they're paying, that's $13.7 billion. The company that's paying it, you're not going to make that money back initially. You have to integrate Whole Foods. You have to do stuff to it. In general, that causes your stock to go down because short term, the value of your company gets lowered. Now, maybe in the long term, and it's a big maybe, maybe they make Whole Foods into something amazing and, all of a sudden it's a rip-roaring great time. But right now, anyways, that's the way the company should react. When you see disparities like this, by the way, in the stock, when you see Amazon jumping when it should fall, those are signals that a market has got into kind of a little mini bubble territory thing. And you can see that, and I kind of went on a rant about this to the chat room this morning, but you can see that on stocks like 3M, and 3M's finally pulling back today. But if you go to the daily chart on 3M, take a look at this, guys. Look at this chart on 3M. 3M right now trading at like a 26 PE. In a normal bull market, if you look at a solid market and you average it out over the last 30 or 40 years, a stock with the growth rate of 3M making Band-Aids, whatever, they're not making the cure for cancer here. They're making household good type stuff. It's kind of steady, it doesn't really decline. People don't buy that much less, but it's not a rip-roaring, surge in demand either. It's not like it's a technology product like, AI or anything like that. So a company like this would trade at a, 12 to 15 PE in a bull market. It's trading 10 PE handles more than that, 25 to 27. Take a look at another one that I think is ridiculous too, McDonald's. Same thing, folks. Look at the run of McDonald's. This is one that I am short, and I love being short this stock because it is trading at a 27 PE. This is McDonald's, folks. And this is the crazy thing about it. You see McDonald's trading at a 27 PE. Compare it to Qualcomm. Look at Qualcomm. Qualcomm's a chip company. They have potential to be a major growth player. They are a growth player, although right now maybe not as big a growth as they have been in the past, but they still have that possibility. And you have Qualcomm trading at like a 15 PE. Think about that. McDonald's at a 27, Qualcomm at a 15. So there's something wrong there. These are where opportunities are born for smart investors. This is where you can say, okay, I see the disparity here. I'm going to take advantage of it. I'm going to position myself accordingly and make money. And that's what we do here at InTheMoneyStocks.com. So I want you to get over there, take the 7-day free trial to the Research Center. Did 2 new trades today. One, I'll tell you them right now, actually. One, we ended up right here. We ended up shorting. I love this bearish triangle pattern on Square. All right, Square, look at the run on Square. It's ridiculous. Take a look at this. If you go back to November, Square was trading at 11 bucks. It just hit a high recently of 25. 25. 11 to 25 in what, 6 months or so? Ridiculous. So, anyways, bottom line is what I love about it is this was a wide range bar. This is all inside bar action. This is a bearish pattern. Look at the breakdown today. We shorted it early in the day when it was trading near 24. We're already up in one trading day 60 cents on this trade already. And by the way, it's going lower. I think the 50 MA is probably where it's headed, around $21. That's where you want to be, folks. And again, we're going to be making a nice score here, well over 10%. I think we'll see this 10% given to us in a matter of a week or so. And there's nowhere else out there that's doing this, folks. I mean, the profits are swelling. I took an options trade today as well. Those options are killing it. My business partner, Nick, he just closed out a Costco options trade today for big money off the bounce, off the 200 right here. I mean, this was just a great level. You had a gap fill right here. You had major support pivot highs, and then it came right into it on a time count. If you know what time counts are, you'd be dead on this position. He bought those calls, made a nice score on Costco. So bottom line is, this is where it's at. Come join us at InTheMoneyStocks.com. Take the 7-day free trial to the Research Center. Get involved, folks. This is where it's at. All right? We'll see you soon. Take care.